Here's something that doesn't make sense. Toronto home prices dropped by 5.5% this year. Mortgage rates are still high at 6%. Yet more people are buying homes than we've seen since 2021. I've got the real numbers from July's market report, and the three factors driving this unexpected buying surge will shock you, especially if you're waiting on the sidelines. What I'm about to reveal could be the difference between you getting in the market at the perfect time or missing out on the biggest opportunity you've seen in years. The data is fresh, it's official, and most first time homebuyers have no idea this is happening right now. Let me start with the bombshell data from July 2025. We just witnessed 6,100 home sales in the Greater Toronto Area. That's a 10.9% jump compared to last July. But here's the kicker. The average selling price dropped to 1.05 million, down 5.5% from last year. This creates what I call the affordability paradox. Lower prices mean more buyers, right? But typically, when sales surge this dramatically, prices go up too. Not this time. The total dollar value hits $40.3 billion. To put that in perspective, that's more money changing hands in Toronto real estate in 1 month than the GDP of some small countries. Comment below if you've been house hunting. Have you noticed this shift in the market? July 2025 just became the best July for sales activity since 2021. Think about what was happening in 2021. We were coming out of pandemic lockdowns, interest rates were at historic lows, and everyone was desperate to buy homes. Now we're seeing similar buying activity but with completely different economic conditions. Prime rate at 4.95%, not the 1 to 2% we saw in 2021. Inflation concerns still lingering at 2.8%. Unemployment at 6.5%. Yet buyers are actively purchasing. This tells us something fundamental has shifted in buyer psychology and market dynamics. Now, the three hidden drivers that's affecting us. Driver number one, the inventory sweet spot. We currently have 30,215 active listings in the GTA. That's 4.5 months of inventory supply. Here's why this matters for first-time home buyers. It's not too little inventory, which creates bidding wars, and not too much, which signals a crashing market. It's the Goldilocks zone. Driver number two, the price correction reality check. That 5.5% price drop, it's not a crash. It's a correction. For first-time home buyers, this means a $1.05 million price is down from $1.11 million last year. On a typical home, that's $60,000 less than you would have paid 12 months ago. Your down payment requirements just got more achievable. Driver number three, the motivation shift. With 6% mortgage rate, only serious buyers are in the market. This eliminates the casual lookers and speculators who drove up competition in the previous years. Real buyers with real pre-approvals are getting deals done. Which of these three drivers surprises you most? Let me know in the comments. Now let's look at condo versus house, the data breakdown. Let's get specific about what you can actually afford. The data shows a massive gap between condos and houses. For condos, the average price is $651,000. It's down 3.2% from last year. And it's sitting at 30 days on the market and selling for 98% of asking price. On the other hand, houses are averaging a price of $1.36 million. It's down 6.8% from last year, and it's sitting on the market for 28 days. It's selling for 97% of asking price. For first-time buyers, this data reveals your entry point. If you're targeting a $650,000 range, you're looking at condos in areas like Mississaugas, Markham, or newer developments in Toronto's outer zones. Now, let's calculate your maximum purchase price using the 4 times your household income rule. If you're making $120,000 household income, your max should be around $480,000, which means you'll need to adjust expectation or increase your income. The regional winners and losers, not all areas are performing equally. Here's the breakdown by region. Toronto Central, still premium priced, but slower sales. In the York region, you'll see showing strongest price resilience. In the Peel region, best value for first-time home buyers. The Durham region, emerging as the affordability champion. So within 30 kilometers of Toronto, your best deals for entry-level properties are Mississauga condos, which is ranging from $550,000 to $700,000 range. Scarborough houses, 800 to 1.5 million range. Markham condos sitting between $600,000 to $750,000 range. The mortgage reality check with the prime rates at 5%. Let's run some real numbers. On a $650,000 condo with 10% down, you'll be needing $65,000 down payment and an average probably monthly mortgage payment of about $3,200. With this condo, you will require at least a $128,000 minimum household income. But here's what most first-time homebuyers miss. Mortgage rates are still significantly higher than the emergency lows we saw. However, they're stabilizing and the Bank of Canada isn't signaling major increases. What's your biggest mortgage concern right now? Interest rates, down payment, or qualifying income? Comment it down below. There are warning signs versus opportunity signals. Right now, we are on a balanced market sitting at 4.4 months inventory. Home selling within 28 to 30 days is a reasonable time frames and they are selling at 97 to 98% asking price. Not a bidding war. Year-over-year price correction creating affordability. If you are buying right now, you have to proceed with caution. Interest rates are still elevated compared to recent history. Economic uncertainty affecting job security and you need a larger down payment due to stress testing. Here are areas you should avoid. Avoid overpriced listings sitting on market that are over 60 days already. Number 2, developments with excessive inventory. Number 3, areas showing consistent month-over-month price declines. Based on this July data, here's your strategic roadmap. Here's your action plan for the next 90 days. Days 1 to 30, financial preparation. So get pre-approved for your mortgage while rates are holding steady. Number 2, calculate your true affordability using current rates, not your dream rate. Number 3, start your down payment savings sprint. Now, looking at days 31 to 60, market research phase. Focus on the 3 to 4 neighborhoods within your budget. Track listing patterns and price reductions. Identify 2 to 3 backup options. Days 61 to 90, active hunting. Make offers on properties priced realistically. Leverage on the 4.5-month inventory to negotiate. Don't wait for major price drops. They may not come. The market data suggests we're in a sweet spot that may not last. Economic conditions could shift, inventory could tighten, or buyer competition could increase. The July 2025 real estate data tells a clear story. We're in a unique market moment where serious first-time buyers have genuine opportunities. With 6,100 sales, $40.3 billion in transactions, and 4.5 months of balanced inventory, the condition exists for strategic purchases. The key takeaways for your home buying journey. Number 1, prices have corrected 5.5%. Inventory levels favored informed buyers over panicked ones. Number 4, markets offer the clearest entry point at $651,000 average. Regional variations mean location strategy is critical. Your next step are time sensitive. This market balance won't last forever. Economic conditions, seasonal patterns, and buyer psychology can shift quickly. The data we've covered today is just the beginning of your home buying education. Watch my next video where I break down the exact neighborhoods within 30 kilometers of Toronto where first-time buyers are successfully purchasing right now. including the specific buildings and developments offering the best value. Click the video appearing on your screen. Also download my first-time buyers 2025 market analysis toolkit. It includes the complete GTA price breakdown by neighborhood, a mortgage qualification calculator based on current rates, and a 90-day action checklist that my clients use to successfully purchase their first homes. The download link is in the description below. Both resources are free and both will give you the competitive advantage you need in today's market. See you on the next video.